Other type of partnership is what we call mudaraba or investment partnership. And this is an arrangement where one party invests capital and other party is like a manager, mudarib, and they provide the time, expertise, and so on. So unlike in musharaka where both of the parties invest some resources that are identifiable, clear, and so on, because as you remember, if we have a situation where we have a loss, we have to know what was the original capital contribution. We have a situation here that one party is providing all the finances. Just like we had a situation in musharaka, we have a situation here where we have investor who is putting the capital or a group of investors, and we have a mudarib or a fund manager who is providing labor. They're putting this money into the business venture and they are hoping to make some profit. Just like before, this profit could be organized in a way that makes sense between the partners. So any kind of pre-agreed profit ratio will work just like in musharaka. So in this case, we could say that mudarib gets 20% of the profit and investors would get the rest of the 80% to share amongst them. In case of a loss, mudarib would lose the labor and investors would lose capital. And this is what they invested. So the party that invests time will lose time. The party that invests capital would lose capital. Just like in musharaka, for example, it is important to understand the profit cannot be fixed as a number. So we cannot say investors will get $10,000 a month for the investment, or mudarib will get this much, 10,000 or 20,000 every month for managing this venture. Always in any partnership, musharaka or mudaraba, actual profit from economic activity must be what is the return in that business. So the portion or the ratio of return must be ratio of the actual profit from the underlying economic activities, not the fixed sum. So just like before, we have two partners. One is mudarib and investor. A manager would put time and labor, and the investor 100K into this business venture. Again, it could be anything that is permissible to make money from any sort of business activity. We could be starting a new business. We could maybe buy and sell something or lease or enter any kind of arrangement that is permissible. In any case, the outcome could be that we make money or lose money. So in the first case, we make profit and the pre-agreed ratio is 70-30. In this case, we see that manager will get 3,000 while investors would share 7,000. So if there is a group of them, they would share according to their capital contribution. In case of the loss, manager would lose time and investors or investor would lose the capital or $10,000. So why is that important? Well, if we look at the bank, based on this, we could make certain bank accounts, not all, but certain. So for example, as you know, Islamic banks, they have a different little bit purpose than conventional banks that deal with money, but in general, they also mobilize the funds from people who have money outside. So in this case, bank is acting as a mudarib that collects, for example, let's say we want to make investment account. Bank would act as a mudarib to collect the money and do something with the money. In this case, people who open investment account, they would be those people who are like investors in mudaraba. So when bank collects the money, acting as a mudarib, and all of these account holders are investors, then the bank would do something with that money to make a profit. So in most cases, this would be to provide financing. For instance, through musharaka for the people to buy their homes. Any profit from that rent that is paid to the bank would be then split. So for instance, bank might take 20% of the rent and all of the rest of the 80% would be distributed between depositors who have, let's say, that particular investment account. You could have saving and current accounts that are based on a little bit different rules. So we would have a different mechanism that we would use. But the whole idea is that we mobilize the fund through mudaraba, for example, and bank would use that money and now become a different entity, in this case almost like an investor when it goes into the financing and buying that equity in the home, for example. Through this, we see the money start circulating in society and benefit people. So people who need the money, or what we call normally deficit units, they get the financing, but not just as the money, but through economic activities where money is really connecting with economy and providing the benefit in the society. So we see that Islamic idea of the bank or financial institution is to participate and transfer money from being monetary asset in being economic asset and benefits real economy in the process.